Hi, my name is Andy from Brooker Mortgage. I'm the operations manager here, and today we're going to talk about FHA loans. So, what is an FHA loan? Who is HUD? How does it all work? FHA stands for Federal Housing Administration, and HUD stands for Housing and Urban Development. That is the division of the government that monitors the FHA loans. They are not the lender, so you're not actually getting a loan from FHA or HUD. You're still getting a loan from a lender. The responsibility of FHA in the process is that they are insuring a certain percentage if a client was to default on the loan. Since they're not putting a large down payment typically on an FHA loan, the lenders, to mitigate some of their risk, will use FHA's basically purchase money insurance, or PMI, which will cover a portion of their loss if someone were to default on the loan. So that's kind of the complex part of it. How it relates to the client. It's typically very good for first-time homebuyers, but it's not only for first-time homebuyers. That's kind of a common misconception. People think is that you can only use it once. That is not the case. You can use FHA multiple times. You can only have one FHA loan at a time in most cases. So some of the benefits of FHA loans are that they're a little bit easier to get approved for than a conventional loan. Believe it or not, you can have a credit score as low as 500 in order to get approved for an FHA loan. That certainly doesn't mean that all 500 credit score type situations will be approved, but it's good to have that flexibility. It doesn't have a hard cutoff like some of the other loan types do at, say, 620 or 640. Another benefit to FHA loans is their requirement of a down payment is less than most loans at only 3.5%. So you don't have to necessarily save for years and years and years to have an FHA loan because only 3.5% is required as your down payment. The other neat thing about that is that gifts are allowable in most cases. So a family member, you have to be able to document some sort of close relationship with the person, but they can gift you a portion or all of the down payment, which makes the home more affordable, especially for first-time home buyers, but really for anybody that just doesn't quite have the down payment ready to go. FHA loans you'll often see with people that maybe have higher budgets or a higher debt ratio. So maybe we have a married couple where the husband's credit just won't qualify, but the wife's will, but then we can only use her income. So FHA loans would come in the fact that even though it's only using one of the income sources and the budget looks high with just their income, FHA would approve it, whereas maybe conventional loan would say, no, we're not going to go that high with the budget. It's important to be able to afford the loan. Sometimes you just can't document all of that income, and that's where an FHA loan might be a wise choice. The benefit there is that you don't need a whole lot of equity. They'll go all the way up to 97.75% of the value of your home. So you don't have a lot of equity, and if you're in a situation where maybe you have an adjustable rate loan or your interest rate's a little bit higher, that might make sense to look at an FHA loan to get your payment decreased, possibly shorten the amount of years you have to pay on your loan, et cetera. There's a lot of benefits that we can provide with the refinances. Another common purpose for an FHA refinance is to pull cash out of the equity in the home. So people can use the cash for whatever they want, but often will do consolidation debts, maybe pay off some higher rate credit cards, home improvements, college education, you name it, the money is yours in your house and you can obtain it with an FHA cash out refinance. They go a little bit higher as far as the equity in your home. You can go to 85% of what your home is worth with a cash out refinance. So those can be very good loans. Another FHA product is referred to as a 203K loan. These loans are for when you're buying a home or refinancing and you need to do significant repairs to your home. So maybe you found a home that is in a great neighborhood, you love the structure, the bones of the house are very good, but it needs some repair. A 203K loan can finance both the purchase of the home and the expenses to do those repairs. There are some limitations, and I won't bore you with all that today, but we would be happy to discuss those limitations with you. So those are some of the benefits of FHA loans. We like to be as transparent as possible at Brooker Mortgage, and there are some disadvantages to FHA loans. A couple, just to name them quickly, is that the PMI is on your loan for a longer period of time than it is with conventional. There also are some upfront fees that FHA loans have that conventional loans won't. So our job at Brooker Mortgage is to see if the risk is worth the reward. If the financial outlay that you have for some of the expenses with the mortgage are worth the benefit of the loan itself, or if we can pattern your loan more effectively with a conventional loan, VA loan, USDA loan, et cetera. So to summarize what we talked about today, FHA loans, the FHA and HUD are not the lenders. You still go through whichever lender has the best terms available, and we can help you find one that does. They help many people, not just first-time home buyers, purchasing, refinancing, and financing the repairs of a home. There are many benefits, but there are also some disadvantages which we can help weigh with you in a consultation. So I appreciate your time today. Hope this was helpful in some regard as to FHA loans. And if you ever need us, please give us a call or visit our website. Thank you.